And good morning, good afternoon, good evening, wherever you are in podcast land. Brendan Cunningham here, the real estate doctor for EXP with me. Matt Paul does it all. And guess what? Dropped in from out of the sky. Somebody's going to talk about some things that we've been touching upon in the last couple of weeks. We have Evan Roedel from Cross State Funding, not Cross State Mortgage, Cross State Funding.
Thanks for having me, gentlemen.
Yeah, thanks for coming, Evan.
Expert. Okay? You're an expert. I'm an expert. He's a different expert because he's the expert in finance. One of the things you heard us talk before we get blue in the face is you always want to deal with good local fill-in-the-blank real estate attorneys, real estate agents, good local real estate
Lenders.
Yep. They know the deal. They know the shorthand. They know which towns have the taxes that are different. So it will just save you nightmares. But something we've also been talking about is some smarter ways to negotiate, especially in highly competitive offer scenarios that we see on a regular basis, and we're still seeing. Just because the weather has taken a break now, it's 65 degrees, doesn't mean it's going to get any better. Probably get worse.
Yeah.
Because there's more people coming into the market, and we still have pent-up buyer demand like crazy. But how do you secure that house other than just prices here and paying here? Other than that, okay, there's some other scenarios that we talked that might make some sense. We hear about sellers' concessions. Sometimes they're using them for closing costs. But I know there's a few smart buyers out there that are really embracing the thing about understanding how buying that rate down, your interest rate. Everyone's looking for that low rate. Well, how can you get the lowest rate down? Everyone's going to square you up on some really important information. I may act like Vanna White here and draw the numbers.
Use the whiteboard.
Take it away. Explain how you can use concessions to buy your rate down.
Yeah, so there's really, when you're adding a concession into an offer, you really have two options. You can use it to just straight buy the rate down, meaning, if you're at a 6.5% today, maybe it costs an extra $3,000, $4,000 in closing costs, buy it down to a 6%, a 6.125%. But where you have to make sure it makes sense, especially with where rates are at today in the sixes, is you need to make sure you're going to be getting a benefit from that, and you're going to be holding that mortgage and not refinancing it through the amount of payments to at least hit that break-even point on what you're saving in your mortgage costs.
Yeah, or else you essentially would just be throwing that money away.
You're throwing that money away. If it's going to take you, for example, 40 months to break even on what you're spending to buy the rate down, and a year from now rates are looking better, you're going to be kicking yourself, why did I spend that money on refinancing?
Makes perfect sense.
Or you're going to be selling it.
Sure. Yeah. Exactly.
Yeah. Temporary job movement or something.
Exactly.
Yep.
Exactly.
Okay.
So another strategy that we were discussing is a temporary rate buy down, which not everybody knows about, but it's something that's certainly out there that can really benefit you.
So that last one that you mentioned, buying it down, that's a fixed for the duration of the loan.
That's exactly right. You buy it down, and that's the rate you're getting for 30 years.
Okay. Perfect.
A temporary rate buy down, however, is you're getting a rate that's 2% less than what your starting rate would be. So say you're at a 6.5% today, you're going to start at a 4.5%.
Wow, which is rates from a few years ago that everybody, that some people are selling right now that have that rate, so that's a little bit more desirable.
What do you say? I can get a 4.5% mortgage today.
Today?
Mm-hmm.
Today?
Okay, there's got to be a hook and a catch.
The one catch is that you're going to get that 4.5% rate for the first 12 months.
What happens the second?
Second year, that rate's going to go up 1%. You're going to get a 5.5% rate for the next 12 months, which, and still, we're not seeing 5.5% rates anywhere at all.
And then that pushes you out 2 years into your loan already.
Okay.
Yep.
Year 3,
it goes up to that par rate.
Back up to whatever.
To the 6.5, wherever you started.
Yep.
That's exactly right.
So there's no downside to do this at all.
Yeah.
Yep.
You could just get the plain 6.5 and live happily ever after, or you could do something better. First year, get it at 4.5. Second year, get it at 6.5. Let's plug some actual numbers in. Okay. So work on what? What kind of scenario?
You do the 300 that you already did?
Sure. Yeah. So in this example, if you were to buy the rate down just in full, buying from that 6.5.
What price?
300,000 loan amount.
300 loan amount.
Yep. Okay. So you're starting at a 6.5%. And now say it costs you $3,000 to buy it down to 6.125.
6.125.
Yep, that's going to save you about $73 and some change a month. which would then save you a little over $26,000 in total over the life of the loan in interest.
Over a 30-year loan.
Over the 30 years.
I will save $26,000 if I buy my rate down from 6.5 to 3.125.
6.1.
6.125. Thank you. And that's going to cost me $3,000.
Exactly. But
Wow.
the
However,
caveat to that
go ahead.
is it's going to take 41 payments for you to make back that $3,000 that you spent to buy the rate down. And if you're hoping that interest rates are going to drop anytime soon, like I know we're all kind of
Yeah.
fingers crossed,
Yep.
you know, that might not be the best strategy.
Might not, but
Yep.
it's better than just getting the 6.5.
Sure.
Yeah,
Okay.
absolutely.
Better, but we want to take it.
Sure. Sure.
Next,
Yeah.
they have to erase this.
So when just to further discuss what the second option, when you if you were to buy it down, and then the next year it increases a percent. Say when you go back to whole at the 6.5 that you originally would have started. Say the rates are, it's 2 years down the line. The rates are where you want them to be at that point. Is there a penalty to refi?
Absolutely not. No.
Perfect.
No penalty to okay.
That's
So,
great.
This is really a good program.
Yeah. Thanks for bringing the good info.
Yeah, absolutely.
And I'll tell you the question I asked him when we first reviewing this, but I'll tell you at the end.
The suspense.
It's like okay. So now, when we do the 3-2 buyback, can you what I'm going to say?
Yeah. So the cost to do it is actually exactly what you're going to save over those 2 years. So if you can add in a seller's concession into your offer, get the sellers to add in some credits back to you on your purchase. In this example, at a purchase of $300,000, it's going to cost you $6,800 to do this temporary rate buy down.
Mm-hmm.
And when everything is said and done over, yep, 6,008. Yep. At the end of those 2 years, with those rates being reduced down for you, that is exactly the amount you're going to save over that period. So you're really kind of financing in some upfront savings into your mortgage, which can be beneficial in a few situations. If you year over year, obviously the expectation is that you're going to make more money if you're in a job where you're growing, getting promotions.
Yep.
And if you're somebody who's maybe used to paying, $900, $1,000 in rent,
Yeah.
and you have that payment shock of, holy crap, I'm in a house,
Yeah.
I have this expensive mortgage now. This is a nice way to kind of ease into that higher payment.
Yep. That makes perfect sense.
Okay. So I'm going to save
6,800.
6,800. I'm going to add this in as a concession, right?
Correct.
So I'm going to get the seller to pay that.
Yep.
And if he pays that, my rate will go down 2% the first year, 1% the second year, and then I'm going to retail the third year.
Yep. And then the goal again by that third year, hopefully rates are in a better position, and maybe we can refinance you down into that 4.5% to 5%.
We have the difference in the rate from 6.5 to 4.5. In the payment.
I don't have the exact difference in payment. I just know, overall that savings over those 2 years is going to equal that exact cost.
Who's got a mortgage calculator? Okay. Well, they're looking up that payment. I want to know. I want to know the exact payment. This is the real story. We don't mince words here. I don't want to skip over anything.
No.
And while he's doing that, I'll tell you, when he was going through this, I said, okay. I did the whole preface thing. Gee, I'm not the brightest guy in the world. Actually, I'm pretty bright. But I said to him, why doesn't everybody do this? The answer was, well, they may not know about it.
Yeah. Yep.
That was the big answer. There was the other, well, sometimes concessions aren't going to work depending on how competitive the situation is. But in certain cases, I mean, even if you were way over the asking price, you would still able to put that 6,000 in there
Yeah.
or 6,800 in there. I'm buying my rate down from 6.5. Just at par at 300,000 by payment is how much? Get it?
Yeah. Yep. At 6.5, that payment would be $1,846.
So I go from $1,846 a month, which is hefty,
Yep.
to
$1,586 in the first year.
$1,586. So it's what,
About
260.
$260. Yep.
Yep.
$260 a month. Wow, 260 times 12. I got $3,000.
Yeah.
So
Yep.
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 Right.
what would you do with an extra $3,000? More specifically, what would you do with an extra $260?
A month.
Buy one bag of groceries.
Yeah.
Because prices are actually coming down. It's like eggs go down.
Yep. Yep.
You're starting to see some food prices come down. You'll see some other things go up. I don't know. But you know what? Everyone is freaking over these rates.
Yes.
Everyone wants to marry that rate you really should be married in a house and shopping the rate.
Mhm.
This is a smarter way to go. And you know what? It's even smarter still because you're dealing with a local guy.
Yep.
He can
Navigate through all the local
navigate through whatever
challenges. Yep.
approvals they have to get. So
Yep.
you get a seller and agree to give you a $6,800 and change credit. You can buy your rate down 2 points. I know it's separate, but still. 2
That,
points.
that's huge.
Yeah, I mean,
Huge savings.
I mean, you just, and I know I've said this. My first house, 14 and a half, 4.5. You're
Yeah.
killing me.
Yeah.
You're killing me.
Yeah.
So,
This could be a nice bridge too, where, you know, if we get out into that third year where that rate's up at that 6.5%, depending on down payment and obviously market conditions, I mean, you very well could be in a situation where you go to refi into a lower rate and you have that 20% equity in the home at that
Yep.
point.
yeah.
Then you're dropping
Doing
that
PMI,
PMI off, and
yep.
you're kind of getting a double benefit and dropping your mortgage payment.
Yeah. That's really good.
And as such, is this, if I do buy this rate down, are there any restrictions like I have to have a certain amount of money down or not?
No, I mean, you could do this right in
3.5% down
You could be in a first time home buyer program, putting as low as 3% on the down payment.
Really?
on a conventional.
On a conventional,
Right.
Wow.
3.5 on an FHA.
Wow.
Yeah, so it really becomes seriously incumbent upon you, first of all, to work with a good agent
Yep.
that has good connections with people that get things done.
Yeah.
Okay?
Yeah.
If somebody were to ask me what separates me from other agents, I'm going to get it done. I'm like a dog with a bone. I'm like, I keep seeking this. I want to get that. Like, that's my job.
Yep.
That's what you hired me for.
Yep.
You didn't hire me to be a bad news. Well, you're not going to close. That's not happening. Same thing. These guys, they're laser focused. One of the reasons why they're laser, this guy, he's got a 2-year-old kid, Cooper, a 1-year-old kid.
Yeah. Not even. Yeah.
3 months. Not even.
Yeah,
2 months.
2 months, yeah.
So I mean, he's well invested in this, and
Yeah.
he's with a great mortgage company that we think is terrific.
And you guys are brokers, right?
We are.
Yep.
Yeah,
So you search all different products.
Yeah,
and
that's
banks.
exactly right. I think right now we have 11 or 12 different lenders that we work with. So we really just take your information, shop you to all these different lenders and see who's going to offer you the best deal.
That's
Yeah.
awesome.
I remember writing in my very first book about real estate. You have some choices here, and you always have choices. Always. Oh, you can go to your local bank. There's some wonderful local banks, and I'm not saying they're bad. When you go to the local bank, they have their products.
Yeah, and that's all that you're going to
That's all
get.
they have is their
Yeah.
products.
Yep.
This guy will go out and he'll search the market for you, much like a travel agent. He'll search all the planes. Oh, you want to go to Alaska? Well, there's only one plane that goes to Alaska,
Yeah.
right?
Yep.
But you also may want to even have some private carriers, something like that. They can search the entire market, and guess how much it costs you? Nothing.
Yeah.
Because he's doing the legwork.
Mhm.
Why wouldn't you do that?
Yep.
Here's the other reason why I suggest using a mortgage broker. If, let's say you place your mortgage with ABC Bank. If for some strange reason you take the package over there and ABC Bank bristles because he had a thing on his credit, he had something wrong, and they say, no, we're not going to give you a mortgage. You take that package and you give it to another lender. Sure.
Mhm.
You, as the consumer, you fill out one application
Yeah.
with this
Yeah.
guy.
Yeah.
You don't even know that's happening, but he's going to continue to shop that. Otherwise, if you went to ABC Bank directly and they turned you down, now you got to go to XYZ Bank and start all over. The
Yep.
whole application thing. It's not that painful, but you know what? In the grand scheme of things, yes, I go for my prostate exam, but I don't look forward to it.
Yeah.
And the one thing I can attest to as well is, you know, a lot of places that you go, you know, won't put any names out there, but you go to a local bank, say you're not approved at this time.
Mhm.
They're going to say, you know, Mr. So-and-so, Mrs. So-and-so, sorry,
Yeah.
you're not approved.
Yeah.
Where on our end, I mean, we have credit software that tells us exactly what a client can do to improve their credit score. We take a deep dive in, and if you're somebody who maybe isn't approved right now, I'm going to give you a step-by-step plan based on your goals and when you want to buy. This is what you can do to
your
get to
credit
that
better and
point,
do all those things. Yep.
to get to that point that you are going to buy. And I can't tell you how many times I've had clients. It's quick, hey, you need to pay down this credit card a little bit and pay off this collection.
And it's just
You
that
need to do
simple. And then,
And a month later, they're approved and they're out shopping.
Yeah.
So it's you know, if you get a denial somewhere, it's not always the end of the world.
so you do, it's like credit counseling,
Yeah,
more or less,
that's
you know?
exactly
Yeah.
it.
That's awesome.
It's credit counseling
great.
that you just included in your thing.
Yeah. Yeah. Value add, though. That's,
Value-added
yep.
service.
Yep.
And-
So even if you're not ready, you still want to get in touch with him now. If you're thinking, you know, whether it's 3 months, 6 months, 2 years, 3 years, talk to the lender now and let them prepare you so that you're in the best position to buy when you're ready.
Yeah, and this is a true chicken and egg scenario here. It truly is. We don't know which comes first. Well, in most cases, we think, but we're perceiving it from our perspective.
Yep.
Most agents come to us first, the agents,
Yep.
and then we say, "Listen, you need to be pre-approved. Who are you talking to? You know, let's talk to some people that we know," and that's where it can get.
Yep.
Sometimes they go directly to you,
Yep.
and then you would look for a good agent, and
Sure.
then hopefully there's a reciprocal trade agreement and all that kind of stuff. However you get to him, it's the crucial piece of the puzzle. This
Yep.
is the true building block, because unless you're a cash buyer, as I like to say,
Look.
you're not getting on the
The plane.
plane
Yep.
without your boarding pass.
It's
He's going to
spoken-
give you the boarding pass.
Yep. Last few weeks we've been discussing that at
Not
length.
get on that plane.
Yep.
You're the nicest, sweetest guy in the world. You're not getting on. It's these little people said you can afford to buy this.
Mm-hmm.
And why that's important for you is not just because it's your boarding pass, but it brings you into reality. Some people say, "Oh, I'm making all kinds of money." Well, you could be a wonderful, let's say, bartender at Salvatore's. Is it
Yeah, there's still some Salvatore.
Russell
Yeah,
Salvatore?
Russell's.
Right,
Yep,
okay. Those guys do really well.
Yeah.
And they should. They're wonderful. They're not just bartenders, they're mixologists.
Yeah.
Right?
Yep.
But I'm just going to speculate. A lot of the money's sort of off the books.
Yeah. It's cash. Yeah.
And
Tips.
yeah, and that's
Yep.
and I understand. And I think it's wonderful that maybe they're going to pass the law. I don't know if they have this. I know they're talking about no tips and all that.
Yeah,
And all
yeah.
that. And they should.
Yeah.
And no on overtime. I think they should. But if you're making 100 grand plus 10 in the bar over there, but you're reporting 20, they're going to qualify you on 20. You're probably not going to hit this mark.
Yeah. Yep.
That's why it becomes important for you to know what is real on paper.
Mhm.
Okay,
Yep.
that's what's real out there.
Yeah.
We see that a ton with business.
I'm sure
owners
you
as
do.
well.
Right. Yep.
Everybody, at the end of the day, when you're filing your taxes, you want to save as much money in
Yeah.
taxes as possible.
Yeah.
But sometimes those write-offs can really
Yeah. Negatively
have a
affect your
negative
borrowing.
impact on your borrowing power.
Yeah.
So it's something you want to look at.
Yep.
I always used to think it was funny, but so-called doctor loans. I mean,
Yeah.
these guys, they would hawk up to their eyebrows when they're coming out of medical school. But hey, you want another $1 million? You're fine because we know
No.
you're going to be good for it down the road.
Yeah. Yep.
It's the leap of faith.
Yep.
And that's the way the bank treats it.
And getting back to cash, though, that I've had a few clients actually ask me, "Can I bring cash? Can I buy it with a suitcase of cash?" I'm like, "Absolutely not." Right, Evan?
Yeah.
So I mean, though,
I
yeah.
used to do that. I remember. It's
Yep.
not good.
Yeah.
You open the suitcase.
It's illegal. They won't let you do it.
Yeah.
Yep.
So it's very
You have to know, right, as a lender,
Yeah,
where that
it has
money.
to be sourced.
Yeah.
They're pretty
Anything
strict
over
with
10,000.
make sure there's no money laundering or
Yep.
anything like that going on. So.
Yep.
Yes, there is some of that.
Yeah, of
Yeah,
course.
oh, certainly.
Yeah,
There
yeah.
absolutely is.
Yep.
Yeah.
So they protect themselves, and you got to just know as a buyer that if you do have a lot of cash, then you got to put it in something, right?
Yeah,
To make it legit and credible.
So, any other hot programs that we need to know about? Any first time
Yeah,
buyer
if you guys
stuff?
got
Yeah,
a few
give me
minutes, I'd
another
love to
one.
tell you about
A couple more,
yeah.
DSCR loans.
Yeah,
What the
yeah,
heck is
yeah.
that?
That's familiar with them.
Yep.
It's an outstanding product. So
Creative.
yeah, very. It's
You're going to
it's
start with
for-
the abbreviations. You know how I feel about
Yeah,
the yes,
yeah.
degenerate sometimes. What is
Debt service coverage ratio.
That's exactly it. That's exactly it. And it's for those investor clients out there,
Yep.
people who maybe already have an investment portfolio or are looking to build an investment portfolio. It is the simplest product to get into an investment property.
Yep.
And how this product works is there's only 3 things you need to qualify.
One.
You have to have a credit score over 640.
So, next.
Yep. You have to have at least 20% for the down payment,
Okay. Good so far.
and you have to own a primary residence.
Yeah.
That's it.
That's it.
That's it. What they look at, they don't look at your debts. They don't look at your income. All they want to know for this product is that the property is going to cash flow equal to or more than what the mortgage payment is.
Yep.
That's it.
And that's what I would call a common sense approach
Yeah.
to banking.
Absolutely.
Yeah. And a great way to
Used
become an
be like
investor.
that when I first bought my first property way back when, what, a 3 family, my income would pay for my rentals. I was in the black on day one,
Mhm.
and yeah, I didn't have any trouble getting a mortgage.
Nope.
Even though I had no money and all that, but it makes sense.
Yeah.
The
That's
bank
because of
gave
rental
me their
income.
money.
Yep.
Yeah, exactly. And if you're an investor who already has a couple properties under your name, I mean, you're going to be tapped out sooner than later on what you qualify for debt to income wise. So
Yep.
this just allows you to keep building and keep building.
That's a great point. Yeah, because every new loan is just reduces your the
it's
margin
something you
there.
qualify for. And
Yep.
another great feature on this loan product is that you can actually, if you're one of those clients who does have some investment properties already, you can tap into the equity you might have in one of those properties and do a cash out mortgage using this same program. They're just going to collect your leases, make sure you're making more on the property than what your mortgage payment will be. But it's a nice way to facilitate, hey, I have this property that I have some equity in.
Yep.
Let me do this DSCR loan, pull that money out, and then use that to use another DSCR loan to purchase another.
Yeah, and so what you're pulling out, and that just to make it easy for people to understand, would be that 20% down payment.
Yeah,
Right?
exactly.
Yep.
That's exactly
Yep.
right.
Yep.
Yeah, pull
So-
that equity out of the home you already have to use to fund the next property.
So nothing would be out of pocket.
Okay, so as we're coming down to the final stages of our descent pattern, let's go quick review. DSR stands for
DSCR.
SCR.
Sneak us.
Yeah.
SCR.
Debt service coverage ratio.
Okay, debt service coverage ratio, and that's that magical investor loan, 20% down, 640 credit score, and the payment, the mortgage covers the place.
That's right.
Yep.
Yep. And you just have to. The only caveat, you have to own a primary residence because the lender
on,
wants
you
to
don't
make
have
sure
primary
you're
residence,
not
why
you're not
Yeah.
going to use the rent that you could be getting to qualify and then moving into one of the
Yeah.
units and not having that rent any longer. So
That makes sense.
So that's a good one for investors. And then if you're just a regular guy looking to buy a house, maybe having a competitive edge in there, using a buy down on your mortgage.
Yep.
What do you call that one? The
temporary rate.
2.21
Yeah, 2-1 by that.
buy down, temporary buy down, buy rate down, save yourself in this particular scenario, $260 a month.
And have a rate that's a little bit more tolerable
Yeah.
to stomach,
6.5 to 4.5. Okay, well, but if it goes to 5.5 the second year, let me ask you, how many people would line up at my front door at 5.5 today? The line would be from here to go on.
Yep.
At 5.5. You're gonna get 4.5 the first year, 5.5 the second, and then you're gonna get.
And at that point, you could refi, you could do whatever you want. So
All good news. All good news. We want to give you the real story. Wrap it up. Here we go.
yeah. Thank you for everyone for tuning in. Follow, like, subscribe. Thank you, Evan, for
appreciate
And
you
how
guys
do we
having
have
me.
it? How
Thanks
do
so
we get a
much.
hold of you? Tell them how to get a hold of you.
Yeah.
Numbers, all that
phone,
stuff.
phone number is the best way, 716-423-9208. You can also shoot me an email. It's evan@crossstatefunding.com.
Okay, we'll make sure it goes on the screen and all that.
Yep.
I'm Brendan Cunningham, the real estate doctor. You want to join our team? You want to buy or sell a house? Reach out to us. We know what we're doing.
They know what they're doing.
Yeah, thank you.